Mortgage rates are dropping fast and hard. Holly McKhann here. Make sure you subscribe so you don't miss any important housing market updates. I'm so excited about this window of opportunity as Stephen Thomas shares with the latest Orange County housing report here in August. Wow, I get so excited for my buyers and sellers when we see rates drop because it makes everybody feel more excited and more willing to pull the trigger and move forward with deals if they're on the sidelines. I'm Holly McKhann, a local realtor in Orange County. A little bit of background about me. My husband and I have fixed and flipped over 250 homes. Right now we have 8 in process in various stages. And I was a flipper before I got my real estate license 9 years ago. Having fixed and flipped so many houses before I got my license helped me become an outstanding realtor, was putting myself in the shoes of the seller and the shoes of the buyer. I know what it's like having bought and sold hundreds of homes for myself. I know what it's like to be in your shoes. I've also sold another couple of hundred houses for clients since that point in time. And one of my favorite things to do is to help people buy a fixer-upper and get it fixed up so they don't have to do that with a flipper. Or if you're a home seller, help you really figure out what the key important factors are to update and upgrade in your home. And there's a link to my free home renovation guide below in the description. So if you want to learn about that, you can learn about that too. And I'm happy to help investors and regular people just buy and sell real estate in the regular way. It's not always about the flips. So back to today's story. Mortgage rates are coming down. In April, they were 7.5%. And today when I checked, mortgagenewsdaily.com, one of my resources I check for mortgage rates, the average 30-year fixed was 6.5%. It has come down a full percent in the last few months. So I'm going to share some insights from Stephen Thomas's report. The whole report is at the link below. So make sure you click on that to find the details of your city. He's got a table of all the cities. You can look at the stats on your city as well as all the details that I'm sharing with you here. So he's talking about how the 30-year mortgage rates move ahead of the Federal Reserve rate cuts. So what does that mean for you? It's not like when the Federal Reserve rate cut happens, the mortgage rates adjust because they are anticipated or baked in advance. So right now, the mortgage rates are anticipating the September's rate cut of 0.5%. So today's rates are reflecting the anticipated September rate cut. So if you're a buyer looking to make a purchase, don't expect that rates would come down due to that rate cut. Maybe they'll come down for other reasons. But now is the time to act. Our inventory is up. You have more choices, more opportunities, and your payment will be lower, or you could afford more, however you want to look at that. So can long-term rates go lower? Yes, they can. But today's mortgage rates are already factoring in future rate cuts totaling 1.25%. It's all anticipated because it's a long game. It's a long-term situation. So those 30-year mortgage rates, which are usually paid off on an average of 10 years. Some people keep them for 30 years. Some people pay them off in 2 or 5 years. The average is 10 years, and that's why we follow the 10-year rate typically. But I want to share a little example from his newsletter here. For a buyer looking to purchase a $1 million home today with 20% down and a 6.5% rate, the principal and interest payment would be $5,057, not counting insurance and taxes and HOA, but just the payment for principal and interest, P&I, $5,057. Due to a further constrained inventory and increased demand, he's anticipating values to raise 5% over the next year. That $1 million home would appreciate to $1,050,000. Even if rates drop to 6%, the monthly payment would be $5,036, nearly identical to today's payment at 6.5%. It's only $21 less per month or $252 annually. In waiting, the buyer loses out on $50,000 of appreciation and is looking at a $10,000 additional down payment. Things to think about. He's got some great little tables that show the cost of waiting. So all of those numbers I just gave you are in his table. Really helpful to see. Another option you can do, purchase a home today and refinance. And he says the rule of thumb when it comes to refinancing, when mortgage rates drop by 1% or more from the current locked-in fixed rate, makes it a good time to refinance. So if you got a mortgage today at 6.5%, if they drop to 5.5%, that would make economic sense to do a refi. He says the monthly payment would drop from $5,057 to $4,542, a savings of $515 every month, or $6,180 annually. So that would be an ideal strategy. If you're ready to go, ready to purchase a home, it could be wise, definitely worth considering to make that purchase now. And if rates drop further, you can refinance, but at least you're not going to get burned by the prices going up and up and up. Why do they go up? We have our constrained inventory with so many people really enjoying low interest rates, and it takes a lot of interest rates coming down and a lot of motivation or life changes for them to want to sell their home and give up a low mortgage rate. I know people that have rates in the 2% and the 3%. So for them to give that up and go to 6.5%, there's got to be a big life event or life change happening that they need a bigger home or a smaller home or a no stairs home, something like that. It's just got to be really significant for them to be motivated to have their interest rate effectively double. The payment doesn't double, but the interest rate doubles. So that's kind of the highlights of his report. Wanted to share with you the expected market time for homes in the $1.25 to $1.5 million range is now 57 days. That's only 10% of the current inventory and 12% of the current demand. Last year at this time, it was 44 days. And the $1.5 to $2 million price point, the expected market time for the home to get sold is 76 days. So there's a couple of samples. I've got the whole table at the link below, and wanted to share one more stat with you. Our current active inventory in Orange County across all product types, 3,426. The demand in the last 30 days, how many homes went pending in the last 30 days? 1,530. Market time across all product types from condos to luxury estates is 67 days. 2 weeks ago is 66 days, so it's only changed by a day, negligible. 4 weeks ago is 56 days, 1 year ago 47 days, and 2 years ago 67 days. The market hasn't changed that much in the last couple of years when you see all that. So that's some of my favorite highlights. Definitely check out, find your city, what the market time is for your city, your price point of home. And I'm happy to consult with you, talk real estate with you anytime. Leave me a comment below. Let me know your thoughts on where the market is going. And once again, make sure you subscribe for more great real estate content, and look forward to seeing you next time.